Good day. I'm Martin Gago with Market Radius Research. We've got D-Box Technologies with us today with CEO Sebastien Mailhot and CFO David Montpetit. D-Box creates haptic systems for theatrical venues, home entertainment, and commercial training and simulation markets. And the company just released its Q3 December financial results, which saw quarterly revenues grow 87% year over year, while posting the company's sixth consecutive quarterly positive EBITDA. But please remember, this is neither recommendation or investment advice. We're here to learn about the company. Sebastien, David, thanks a lot for joining us. And please give us an overview on the quarter.
Thank you, Martin, and welcome everyone. We are really happy to connect with you following the release of our third quarter result last Thursday. In the last quarter, we talked about the theatrical market. Today, we'll be focusing on something we discussed about the acceleration of sim racing, as we have tangible development in this space over the last few months. Our plan would be to wait until next quarter to discuss the foundation we are building in the video gaming market. So let's start and roll. Of course, before we begin, I need to direct you to our usual disclaimer regarding forward-looking statements. We'd like also to point out that all dollar amounts in this presentation are in Canadian dollar, unless, of course, otherwise specified. Starting with our financial results, our third quarter was highlighted by strong revenue growth. Our total sales increased, as you said, Martin, 87% to 10.5 million, driving by a surge of system sales, which were up 143% compared to Q3 of last year. It was a great quarter in terms of sale of theatrical exhibitor and theme entertainment in particular. And overall, I'm happy to say we're at 25th year anniversary. This is our second best quarter in terms of revenue in the full history of D-Box. Our gross profit, excluding amortization related to cost of goods sold, increased to just under 4.5 million from 3.6 million in Q3 of last year. The increase was, of course, due to a much higher revenue for the quarter. However, our gross margin, excluding amortization, decreased to 48% from 64%. The percentage decrease was mostly the result of three things. First, we had a lower proportion of right of use, compared to total sales, as well as a higher proportion of revenue from theatrical exhibitor and theme entertainment system sales in the quarter. And thirdly, these theatrical exhibitor and theme entertainment system sales were impacted by higher logistic costs during the quarter. Importantly, you mentioned that again, Martin, this is our sixth consecutive quarter with positive adjusted EBITDA, which improved to 0.5 million from 0.4 million a year ago. It's also important to remember that we are scaling our business and investing in growth. During the quarter, we succeeded to double our output capacity, which require an investment on our parts. Q4 will benefit from this higher output capacity without having these structural costs. If it were not for this one-time item and the inflationary pressure during the quarter, our EBITDA would have been higher. So Martin, this would be a good time for all financial questions. And of course, for those questions, I'll refer to the Pro of Finance, my CFO, David Montpetit.
All right. Thanks a lot, gentlemen. Yeah, so audience, please lob out any questions you have. And just to get some clarification on the revenue side, you had a huge increase on the hardware sales, which hardware tends to be lower margin than sort of the service software of selling per seat, like bum in the seat in a movie theater, where you get higher margin revenue off of that. That's kind of how one of the factors that contributed to the higher revenue, but then also the lower gross margin percentage. Is that how one would describe it? Yeah, and the rights of use or the theater seats that are being sat in and viewed from, that was roughly flat year over year. Avatar came out in that quarter. I would have thought that your Q3, calendar Q4, the Christmas theater quarter, I thought it was kind of a good quarter in the theaters. Why was that flat, roughly?
Yeah.
Yeah, so Martin, there's three components there. So our footprint increased compared to last year in terms of number of the theatrical seats that are out there. Most of the time, it's a question of timing also with the movie. So Avatar was a little bit later than last year. It was Spider-Man, who started at the beginning of December. So when we look at Avatar being the best movie ever sold in D-Box over the last 25 years, so we'll get some revenue, of course, in Q3, but also another portion, an important portion in Q4 this year, because the timing was different from last year. So the studio impacting the impact on right of use, not only the footprint in terms of theatrical.
And as well, on the hardware side, you sold theatrical seats into the movie. That was part of your increase of sales. And that also implies once those seats are installed, they're going to start generating revenues for your client and as well for you. So that should hopefully give a little bit of a lift going forward.
Yeah, that's right. So most of the time, let's say we take an average during a quarter, the customer installed the seat over a period of time. The next quarter, most of the time, these seats are available for sales, and that will generate revenues in the next quarter for sure. And again, that's going through the movie slate that are available by the studio during that quarter that can influence the rhythm at the time that those revenues are coming in.
To get nerdy on accounting and revenue recognition, do you recognize the revenues when they sort of get shipped out, when they land, or when they're installed and actually properly working at your client's like theater?
Yeah, so we have two revenue stream so it's based on the base principle of accounting within our disclose in our financial statement. So the system sales, it's really on when the property is transferred to the exhibitor, and for the right of use is when the tickets are sold. So there's two different accounting policy for that.
Okay. Given that Avatar was late, it's your biggest movie ever, should we imply from that, and I guess we got Ant-Man coming out, which looks like it could be a biggie, could your fiscal Q4, calendar Q1, should we expect a lot out of that on the theatrical side?
Yeah, so historically, usually Q4 is slower. It's one of the slowest quarter for right of use. So with the Avatar this year mixed with other movie, I think that it would be it's a better than historical numbers.
All right. We have a question here from the audience. Even with the sales increase to 10 million, still no profits because of the expenses. That's on an earnings, not on an EBITDA basis. Is that a goal to reach profitability, not just EBITDA positive?
Of course, it's the goal to reach profit down the road. So we're not there to just to create sales. And Sebastien mentioned it, I think, over the last three sessions with you, Martin, that we need to do profitable growth, and this is what we're looking for. So EBITDA it's one measure to make sure that our organization create positive EBITDA and cash value, and down the road, yes, so we have to become a profitable company overall.
You mentioned in your opening remarks, Sebastien, where you had some one-time expenses in terms of expanding your production capacity. A lot of your work, I believe that's how you characterized it, a lot of your manufacturing is done outsourced. Was it just sort of enabling the systems, or help sort of with some CapEx on your suppliers who help build things for you? Could you explain like how does your equipment get outsourced manufactured, and what is your kind of capacity? And if you are doubling in capacity, I guess that I'm throwing a lot here, but that sort of implies you see a lot of business coming down the line.
I think I'll simplify that. When you move, let's say, for a customer that have 10 units or by order, or 200 units, 1,000 units, you need to find a way to scale, right? Like when you automate processes internally. So part of our strategy, and we mentioned that is the path, is to, in some product, to move into a fabless area. So meaning outsourcing as much as possible as we can on the production to bigger organization. So when we need 100, 200, 500, 1,000, they are able to scale more quickly by hiring persons. So in a nutshell, that's what we did. There's still some stuff we're doing internally, but we have outsourced to bigger organizations that are able to fulfill a lot of units. So that's why we succeeded in a tough environment in Q3 to be able to double the capacity in a quarter.
And that's working with your outsourced partners, making sure you've got all the systems in place and QC and all that so that you can execute properly at those higher volumes.
Yeah, Martin, we love to say real life, real drama, right? Meaning all people think that we push on a button and everything happened. But yes, during even the COVID, the close of China, the close of the country, the transportation, we all have to live through that. So 2022 calendar was to do that shift between internal production to, of course, working with all those partners, setting that up, putting QC, bench set, all those QC to make sure everything was as a quality as we want to accept it, coming out from Montreal or coming out from a third-party international manufacturer.
Can you, on the theatrical side, obviously your business there are a lot more legs on your stool or your table now, where you were before previously almost exclusively focused on theatric. Now you're boiling out in the video game and the racing side of it. How many theaters or seats, or what is your metric in terms of on the theatrical side of how big your footprint is?
Well, as we mentioned, and I think with the last presentation you mentioned around that, so roughly at a 800 screen, I'm just rounding out the figures, and we want to go as quick as possible to 1,000. There's still a lot of cinema out there. There are 160,000 screens around the world. Of course, they're not all tailored to D-Box specifically, but of course, we want to increase that foundation of right for use in bigger and with big circuit that can roll screen after screen, year after year. So that's our next target, to be at 1,000 seats. And with everything that we have announced so far publicly, we can be seeing by the end of December, we're a little less than 100 screens already signed to be installed in the future. So well, some nice figures to grow the footprint.
Well, with that, I think we've dealt with the financial and that side of the business, and I think it's time to move on, dive into the racing market. So let's take it away here.
So let's jump to racing, and I'll go at the foundation. Martin, we were having a discussion. So D-Box, as you're saying, is a haptic platform, and our job as executive is to find the area that has the best growth, right? The best long-term growth, biggest market, but as well that we make sure that there's some short-term traction, because it's one thing to run after a market, but if you run for 10 years, it might be a long run. So in 2022 calendar, when we had previous meeting, we were saying that the theatrical footprint could continue to grow. And I think we presented some nice figure, even with tough environment, to do that. Higher occupancy rate, higher footprint. We did mention as well that racing as well was an area that we have been playing for multiple years, but we thought that we were at a traction point that we could be running to another level. So that's why we want to talk about racing today, which is the second part of our strategic plans to grow the box to another level. So as I just said, it's important to remember that we are building multiple revenue streams. We all want dollar at the end. We want net income. We want EBITDA. It's all about the numbers. Although Haptic has broad application in many markets, we are focused on those which we feel has the best growth potential and traction. And as I said earlier, we have tangible development in the sim racing market. The sim racing market was already on the rise before 2020. But with the pandemic lockdown showed the motorsport community the incredible role that simulator can play in their sports. We see esports, we see NASCAR, we see F1. They are everywhere. As a result, interest and participation in sim racing has grown significantly in the last few years. So where do we play? In these highly realistic simulation, driver wants to get as close to the real thing as possible. Everyone wants to be a driver. At home, at a race, at the dealer, everyone love racing. That's where D-Box comes in. Our leading haptic technology pushes the boundary and blurs the line between virtual and physical. In short, D-Box equipped racing chassis allow you to feel every texture change, every bump in the track. And of course, if you don't want to have that, the only thing more real is to drive on the real life racetrack, but it's not available for everyone. Again, racing is sexy, right? People love that. But what is important is the revenue stream it brings to D-Box. Speaking of tangible development, during the quarter, Kindred Concept opened its first F1 arcade location in London, England. The state-of-the-art F1 Racing Simulation Center features 60 D-Box equipped simulator. But more importantly, Kindred Concept has planned for opening 30 D-Box equipped F1 arcade location over the next 5 years. We are talking about close to 2,000 simulator. That's a lot of money. Other tangible development. In December, we announced collaboration with 2 leading sim racing equipment designers, manufacturers, and marketers. First, we are partnering with RC to design and market a multi-purpose haptic platform, which will be compatible with all RC sim racing and almost all chassis from other sim racing equipment manufacturers. So new opportunity, but retrofit opportunity as well. Second, we are partnering with Track Racer to launch the first chassis to be equipped with 5 of D-Box new G5 actuators. The value of the haptic component to be sold by D-Box under this agreement is estimated at approximately $1.3 million over the next 12 to 14 months. So real revenue, real dollars for D-Box. Finally, people want that we work with big organizations, but sometimes they take time. We signed an exciting licensing agreement to commercialize a Mercedes-Benz and Mercedes-AMG multiple first motion platform targeting consumer and car dealerships. We are extremely proud of the validation provided by partnership with such an iconic brand. The first product under this agreement to be commercialized is a modular motion platform. You see it at the bottom under the rig, which is expected to be available for purchase by the end of the month. This innovative plug-and-play multiple-purpose platform is compatible with most sim racing chassis manufacturers. It can also be used in conjunction with chairs, sofa, and more in-home and commercial entertainment options. So get a lot of retrofit capacity that D-Box can bring. This is just the first product to be developed with Mercedes, as our agreement opens up a wide range of product development opportunity for D-Box. So, facts. That is a look at our recent development in the sim racing space. But importantly, each of those partnerships I just discussed are $1 million plus near-term revenue opportunities. Again, real dollar. This is an exacting market for us and one we see a lot of growth potential in the short term and in the long term. Turning to our broader outlook for D-Box as a whole, we are expecting a strong finish to our fiscal 23 year. The value of our order book remains high, and we exited the third quarter with a solid cash position and balance sheet. In our theatrical vertical, Martin, you alluded that with David earlier, we have several highly anticipated movies being released with D-Box in this current quarter. Of course, some Marvel and DC superhero sequel, but as well John Wick Chapter 4 and Dungeons and Dragons. So as David was saying, for a good quarter. I know people are waiting on the update on video gaming and our collaboration with Cooler Master. I'm happy to mention that the Cooler Master Motion 1 haptic gaming chair was unveiled at the 2023 Consumer Electronics Show in January to influencers and key people in the industry and was well received. We expect it to be available in pre-order in the upcoming month. We have to agree that we agree that it's taking longer than expected, but we continue to see video gaming as an important growth market for D-Box, and we look forward to discussing this market in the next quarter. One thing that I'll say, Martin, today, which is important, is to know that all the haptic technology and ecosystem that we are developing for the gaming chair concept has sales potential in all our markets. So yes, it's a gaming play, but it's a all segment play for D-Box to bring a new experience at a lower cost. Finally, I know there's some challenges out there in terms of inflation and supply chain, which is still going to be there for the short term, but I'm really excited about what we did in the last 3 years, and as well we're heading as a company, even in a tough environment. So we mentioned about growing, we want to have sustainable growth and profitable growth, and that's going to be our motto for the month and year ahead in front of us. With that, Martin, I think we're ready for the phase number 2 of our Q&A. And thank you in advance for your time and all the people that are spending some time to hear about D-Box.
You kind of dealt with this. We have a question here from the audience. Can we extrapolate you have 60 simulators in that one in your initial London location for the F1 racing thing. 30 centers, 30 times 60, 1,800 are they all going to be that size? Are they going to be smaller or bigger? Or is that a good number to extrapolate with?
It's a good estimate. And if I do it on my calculator, that's what it gives me. 1,800 simulators using multiple actuators. So yes, that's the plan. That's the plan that they want to roll out right now.
And that would be over a 5-year period, right?
That's over 5 years. Yeah.
Yeah. So that's over 300. If you're sort of divided equally, that'd be 300 plus per year over the next 5 years.
Yeah. Your math is really good as well.
All right. Oh, there's a question here. In regards to your intellectual property, are you taking and what steps are you taking to protect it when you enter all these business partnerships?
Really good question, Martin. So IP is the core of D-Box, being, of course, we had a lot of patents. Of course, that information publics more than 150 patents. So we have a patented strategy for all the countries specifically, which is one part of that. The second part as well is, of course, all the contract that the more important is the partnership, the closer in terms of reverse engineering and things like that we have to see. And the third part, Martin, that is really important, and as well, we're trying to be as much as far as possible, is you have patents, you have contract, you have protection, but you have to pick the player you're playing with and how you're sharing some information or how you're dividing the technical component. So a D-Box solution is a combination of software, hardware, algorithm, etc. So the balance of all that is what I mentioned in terms of IP protection, but as well making sure that no one has all the ingredients to make the whole recipe. They will have to talk to us.
It wouldn't be tough for some some manufacturer engineer to put together little actuators that jiggle around a bit when, like, you don't patent the whole concept of it. You've patent and have IP in sort of the industrial execution of it, that there's smooth textures and how the different things go. So even if someone comes up with sort of cheaper versions, you're the one partnered with Mercedes and some of the premium brands out there. So there would be different segments to this market, right?
Now, Martin, I'll go in a simple answer. There are many actuators on the planet. So we're not the only one to make actuator first. So that is the most important thing. That being said, it doesn't mean that all the actuators are able to drive the same kind of experience and refined experience as we're doing. So this is the most important part. So what D-Box has put together is it needs the actuator, the software, etc., is to be able to create really refined experience, vibration, motor texture, floating, VR type precision specifically. And that's where D-Box has a worldwide edge specifically, and that's the recipe of D-Box. So this is where people have to know, but it's just not just the hardware, the software. And Martin, to your question, if someone build an actuator less costly than us with the same quality, Martin, I invite anyone to send me that actuator. I'll buy it from him, because for us is the solution that is important is we're building experiences which need a comprehension of the content, the body, the software, the encryption, the distribution, and how to make that experience with any type of hardware. So that's what D-Box is all about. That's why after 25 years, even if there's some competition, nobody is closer to us in terms of, and then it is closer in terms of the quality of the experience. But if you just want to have actuators that is dropping and have G-force, there's many out there. We can do it, but it's not the market we're competing in.
Okay, so it's really a system, and now, like, yeah, you've been doing it for 25 years. I doubt it took like a weekend visit to get into partnership with Mercedes, probably a little bit longer. And like yeah, the brands you're dealing with are some of the most protective high-end brands that are out there, F1, Mercedes, all the movie studios. So that makes sense.
So it's Mercedes. As you know, we had business with John Deere, with Caterpillar. We had them directly to partner with the NASA. So we're working with a lot of people that the quality is important, the reliability is important, the quality of the experience, and the reputation as well of the company. So that's why, and same thing with the studio in Hollywood. So we have built a trusted network going from the content creator to the integrator to the manufacturer. So if you want to copy all that, Martin, is it possible? It's always possible, but I'm still laughing after 25 years. But of course, we're trying to still be in innovation. Why nobody has been able to put an ecosystem together, because there's multiple pieces to make that at the level we are right now with the quality of the experience we're able to build.
Yeah, the partnership, going back to your kindred concepts with the 30 locations, is that just like they're starting in London? Is this a UK footprint or a Europe, or is this a global thing, or do they have any sort of exclusive rights? Because it is co-branded, I guess, they've co-branded with F1, which is one of the premier brands out there.
Well, Martin, good question. So as being F1, you can definitely understand it's around the world. So the first one has been in UK, but it's a concept that has been endorsed by the F1. Of course, as you know, we have the FIA that we're connected, so it's going to be in multiple places around the world.
And do they have any kind of an exclusivity on it, or they're probably maybe with F1, but not on like a racing arcade? I could build a racing arcade here in Vancouver using your equipment as well, just not F1 brand.
For today, I won't be discussing with the strategy, but I was saying that the F1 with our integration partner is us. We're all linked together because you wouldn't be changing the technology and the solution from center to center.
Yeah.
Kindred is that's them that has that, but they have multiple way to deploy that. But I'll keep the secret to their self as is their strategy.
We've got a question here. I believe this has maybe more to do on the video gaming side. Is the acquisition of Interhaptics by Razer to expand their haptic ambition and their Hypersense product a threat to D-Box?
No, opportunity. For me, as we know, the haptic is going to be part of our life and everything we do. We just already discussed about that in various time frame, in various markets. For me, the more people that are interested into haptic is important. And it proves that Razer is interested to integrate the haptic into his portfolio. That's for me, that's a confirmation of their interest for the haptic. And of course, without getting to the subtlety, Martin, and I will cover that in the next quarter about what we are building is we have, I'll just say for today, we have pieces of the puzzle for the gaming industry that nobody has. So even if some people are starting to be with that, well, if they want to have the full thing, they will have to talk with D-Box. But on that, Martin, that's what we want to next quarter to cover that, because we want to take the time with investor to discuss about the technology, the ecosystem, the content orientation, and what are the key things that makes D-Box, I would say, a leader player. Even if it's taking more time, I do agree with that. But that's building all those big pieces with big customer. But it's still, we do believe in that market, as we're saying, for the mid and the run term. Now we have to make sure that the short-term traction is there. We can sell and bring real revenue to the business.
Well, I am not seeing any more questions here. We should wrap things up. Any final comments here on the simulation or the quarter itself before we close this off?
Perfect. So again, Martin, everyone, thank you for the time today. Thank you for spending on time on D-Box. I'll try to summarize that the industry we're in is, again, I'll use what I said earlier, is a sexy business, but we need to drive revenue, right? People are excited by a new movie, a new technology, so VR, things will change the world, but sometimes they take more time. So the difficult job we're having, and we're paid as executive, is to make the balance between emotion and real dollar. So I'll just finish it on that, and we've been coherent. So we're seeing there's 3 strategic markets for us. One, which is completely in full commercialization, which is called the theatrical market, which we can sell more product to that industry and have more screens. We did feel as well that people that want to get entertained, and it's closer in even the commercial entertainment, that people are getting interested to racing. And as we've been there for a couple of years, we wanted to make sure that we succeeded to be at the higher level with the Mercedes, with the FIA, with the NASCAR, etc. So we are confirming that traction, that D-Box can move to another level. And thirdly, yes, the gaming market, we're really excited around that. But I mentioned that it's building the gaming foundation. It won't be done over 3 months. So we have, I would say, a full throttle market, the second market going to full throttle, and the third one, definitely, that we're making sure we arrive with the good product, the good technology. So we put the foundation, we learn, and we have growth in the future. So this is what people have to invest. this is where D-Box is going. And yes, we need to do profitable growth, and we're paid to find solution, even when there's none in the market.
All right. Well, with that, I thank you very much for taking the time, giving us an update, and all the best. And I'm looking forward to further updates here as things progress. Thank you.
Thank you, Martin. Thank you, everyone.